The real estate market is the biggest asset class in the world. When we look at the distribution across the world, then we can see the real estate market comes at the top. Then you have equities, bonds, then you have commodities like gold, silver, and crypto markets as well. So basically, real estate is the biggest asset class in the world by a big margin, hands down. But when we look at the growth trend, we realize the real growth in the real estate segment has started in 2001. And surprisingly, what happened in 2001 is China joined WTO, World Trade Organization. And since then, it has opened the doors for China to start having bilateral trade agreements with many countries across the world, many major markets like US, European markets, as well as the Asian markets like Oceania, like Japan and China, and Taiwan and Australia as well. So China became like an economic growth engine for the entire world. Okay, in the last 20 years, we have seen China has grown like exponentially, double-digit growth year after year for the entire 2 decades. And now we're seeing, in the last few years that the Chinese economic growth is slowing down, but it is still much higher than the Western economies like G7 countries. And when we see that the Chinese have accumulated a lot of wealth in the last 20 years, that enormous amount of wealth did not stay in China, right? It actually left China, and it has flown into the major real estate markets in the world like US, Australia, Canada, UK, other Asian markets like Malaysia, Singapore, Thailand, and Dubai as well. Okay, so when we look at the overall trend of real estate growth, right, we see that it really took off in 2001, but it was kind of moving slowly sideways. In 2007, 2008, we saw a big financial crisis in the world that has actually tanked the entire US residential market. So we can see there was a big dip in the US home prices as per this chart, and it kind of remained very low until like late 2018, 2019, when it started to come back up and join the historical trend. But if you look at the red line, which is Chinese real estate prices, it was also chugging along with the same trend line, but now it is kind of plateau and then coming back down. Like, look at Canada and Australia. This is off the charts. So when you look at this chart and when you see the economic growth of the entire world, China is slowing down. The Chinese real estate is also slowing down and declining. Okay, in the face of the population crisis, because when you look at the Chinese population, it is also declining as well. They have one child policy, which is now hurting them back. Then in the last few years, because of the COVID, zero COVID policy, they have more deaths than the new births. So they really have very serious population crisis. And with that population crisis, how can you expect China to grow further with the same trend that we have seen in the last 20 years? I don't think so. So that means the Chinese economy is going to slow down, which means the Chinese real estate is going to slow down. It is going to have an impact on the global monetary system, because as I mentioned in my previous video, the banking system, the global monetary system, is intertwined like this. All the major banks in the global monetary system, they have assets, liabilities on each other balance sheet. So if you have a trouble or crisis in one of the major part of the world with regards to real estate, which is driven based upon the debt, that debt has to be paid or it has to be defaulted. But in the sight of those economic contraction, that debt will be most likely be default, and that will have repercussions across the global monetary system. So when you see the Chinese economy slowing down and their real estate market is crashing as well with the population crisis, by looking at that, can you imagine that Canada and Australian real estate market will continue to go up? I don't think so. When we look at the Canadian real estate market, it's not just one thing that drove the entire market, right? It was Chinese capital to begin with, which is flowing into this country since 2001. Then we have the immigration, right? And then we have the zero interest policy, okay, that has kept for quite long. So along with these three fundamentals, this has exploded the real estate market in Canada. We have seen the aggressive interest rate cycle, okay, that has deflated the property bubble quite a bit. We are down 20% from the peak in the nominal terms. When you look at just for the inflation, that might be 30% down, who knows, right? So interest rate has definitely deflated the property bubble in Canada, but we have immigration still going on, right? That is not having a huge impact on the resale side of the real estate. Yes, we have housing prices with regards to rental demand, but the real estate transaction is not happening as much, okay, because of the higher interest rate and because of the lack of Chinese capital. So you see, a lot of people are just looking with laser focus on the interest rate and the immigration, but the real driver behind this growth for the last 2 decades was the Chinese capital, okay, and that capital hasn't started flowing out yet. Now we are seeing that a lot of anti-China policies coming out from the US, and Canada is most likely to follow that. We have seen this news from Canada federal government about banning the Chinese EV sale in Canada, right? And they can do that, but Canada is not US, guys, okay? We are so small. So if you're going to piss off China, they could retaliate economically. And one of the major impact that could have on Canada is if Chinese capital start leaving Canada, especially from the real estate market. And if that happens, what do you think is going to happen with the real estate market, especially in GTA and Vancouver area? I'll let you be the judge. Okay. Anyway, I thought this was an interesting insight that I wanted to share with you, that it's not just immigration, it's not just interest rate, it is also the Chinese capital. So combining these 3 factors, this has overblown the real estate market in Canada. And if any of these factors start disappearing, this is going to deflate the property bubble even further. Anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up, subscribe, and I'll see you in the next video. Bye. Are you a non-US tax resident and looking to open a business in the US? Well, this video is very important for you, so watch it till the end. Basically, if you are a non-US tax resident, which means you don't have SSN, which is your tax identification number, which means when you open a bank account or you open a Stripe account or PayPal account or Amazon business account or any business account, you need your SSN number in order to open any of these accounts in the US. Well, if you are a non-US tax resident, which means you don't have SSN with you, you can have another identification which is called ITIN. So ITIN is similar 9-digit number which is used for tax purposes if you are a non-US tax resident. So whenever you apply for a business account or bank account or payment processing account like PayPal or Stripe or even Amazon FBA seller, or registering a business in the US, you can use ITIN instead of SSN. This will help you to set up all of these things even though you're not a US tax resident. So if you're in Canada, Latin America, Europe, UK, Australia, or anywhere in the world, you can apply for ITIN, and you can use ITIN to register a business, open up the business accounts, open up the payment processing account in the US, and pretty much do all the tax related stuff using ITIN even though you don't have SSN. So how do you get that? Well, there are some companies available on the internet that will help you to get you the ITIN, but they may charge between $400 to $600 per application. We have a company called ITIN, and they are one of the quickest in terms of submitting the application. So they will help you out in terms of collecting the documentation, help you out in terms of answering your questions, and help you out in terms of submitting the application. Now, the typical application process times takes between 4 to 14 weeks, but the ITIN people only take 48 hours to collect the information, help you out in the journey, submit your application, and from that point onwards, it's basically IRS. IRS can take between 2 to 12 weeks depending upon their volume of the applications, but throughout the process, they will handhold you in terms of opening up the accounts, help you to open up the FBA account or Stripe account or PayPal account, or guide you in terms of the entire process. They're pretty quick to respond. They have people speaking English and Spanish and Arabic, and they can give you very competitive rates as well. Plus, if you use my referral link, which will give you extra $50 discount when you purchase their services. So if you are looking to open a business in the US, start your journey today, apply for ITIN. Even though if you're not looking to open a business now, you should have ITIN just in case in the future if you want to open a business, you're ready from tax standpoint. So check the link in the description below, and let's get back to the video.